Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, who is a Senior Investment Manager at Gower Financial Services. We're going to take a look at what has been happening in the world of finance over the last quarter of 2021, and we'd like to remind you that all opinions are personal and no investment advice is being given. After all that, Toby, good to see you again.
Hello, Tony. Good to see you too.
And you're in the slimline version today because you're using your phone, but that's fine.
That's right. I have no idea how to change it. I'm too much of a dinosaur, I'm afraid.
Can we start off by doing our usual three-monthly review on the stock markets of the world, starting with the UK? How have things been going there?
Yes, it's been a surprise turnaround really this year, because last year tech and everything American was flying high. And the UK has seen a big turnaround, and the same applies to Europe as well, because both are seen as very traditional stock markets with industrials and energy and mining companies, all the kind of what you call old world firms, as some would say, and they've been on a tear. It's called the value rotation. So people moved out of growth stocks like technology into value. So tech in America had a bit of a sell-off in May and has bounced back. So it's a bit of a roundabout at the moment in those markets.
When you use the term value, what are you looking for? Capital growth or income or both?
Well, often value companies produce a decent income or dividend yield because their price is suppressed. So what we call the cyclical firms have been out of favor for a very long time. The price is depressed. So if you remember last time we spoke about dividends, even if they're stable, if the price goes up, the yield is low. Price goes down, the yield goes up. It's like a
sort of seesaw. Yeah.
Exactly. Yeah. So value shares have been under the weather for a long time. So it's made the income they produce by way of dividends look very attractive. But there's also a term value trap, where people buy cheap stocks and they get cheaper.
Which doesn't help too much. So as far as the US is concerned, that's sort of chugging along reasonably well, but it's seen a lot of the growth over the last few months has slowed down.
Yeah, I mean, it's still trading at or near record high, and it's got the results season coming out soon for the second quarter. But it's not so good elsewhere in the likes of China and Japan. In China's case, you've seen a lot of the tech firms being hit by the government because they think these tech companies are getting too big for their boots, and they're having a lot of regulatory action against them. In some ways, America could learn from this, but it doesn't help investors, unfortunately. And in Japan, we've got sort of classic third wave, a lot of infections going through the economy. As most scientists know, or biological scientists know, third waves are very mild because they're kind of dissipated throughout the population already. And this is why you get lots of cases, but very few people in hospital. It's just the way viruses work.
But it's quite worrying, because you normally think the Japanese are going to be ahead of the game over this question of vaccinations and things like that. On this occasion, they appear to have been left behind. And of course, that then has a major impact on the Olympics, where they're saying that they won't have ordinary spectators. So it's a strange situation, I think.
It is. I think a lot of governments have got involved in quite heavy scaremongering latterly. I think that was fine a year ago when it was in panic stations, but every decent scientist knows that third waves have lots of cases, but very little effect on the population. So yeah, it's kind of they've got into this habit of being sort of quite tyrannical, and they can't shake it off, and so it's come back to haunt everyone. In the case of Japan, yeah, you're dead right. It's going to affect the Olympics, particularly on the spectating side.
When sort of looking at things a few years ago, the so-called BRIC economies were the ones to watch. That was Brazil, Russia, India, and China. Now, obviously, Brazil is a total basket case now in terms of what's happened there. India is still doing reasonably well.
Yeah, I mean, a lot of these countries do, or the stock markets do well when the dollar's weak.
Yeah.
And what we've seen is a lot of dollar strength. So emerging markets are not the flavor of the month. They also depend a lot on commodity price expansion and growth, which has happened to an extent as well. In the case of India, they're net oil importers, so that has a counter effect. But overall, there's not much appetite for taking on the extra risk of these emerging countries because you get better rewards elsewhere.
I mean, the fact of the matter is, should they sort of take the B out of brick and just make it Rick? Or, or where are we as far as Russia's concerned?
Yeah, I mean, Russia's a good case in point where people see a lot of value with the energy element to it, and the oil price is doing well. So, yeah, I mean, it's kind of on the fringe now. It used to be quite popular and trendy, and there was good growth and performance to be had. But yeah, anything. Think about China just before. The Chinese and Japanese markets are badly underperforming this year against Western countries. So, yeah, people just get to a stage where you think, why bother?
Yeah.
Eventually, you might say, well, that's a good time to invest because it's not the consensus view anymore.
Mr. Woodford and the Chinese fund, that has finally unravelled, has it?
Well, he was, so all that has kind of left investors very hurt because assets were sold off very cheaply.
Yeah.
And, it's left a bitter taste in the mouth, both from a regulatory point of view and from the public, because, the guy was trying to start another fund as well in Jersey, I believe. So, yeah, it's always the retail investors get hit with these things.
Yeah.
And institutional investors have, by the time the news hits headlines, have already left.
They're out. They're out totally.
Same old story.
Now, being totally topical and up to date on these matters, Toby, the G20 have come up with a minimum corporation rate tax of 15%. And that was announced in the last few days. What sort of effect is that going to have on, say, Ireland at 12.5% and Hungary at 9%?
Well, I think there's always carve-outs in these things, and because Ireland is part of the European Union, I'm pretty sure they'll have nothing will change there because they want to use it as a way to get companies in without scaring them off. And if you start having a level playing field, firms will choose other countries for other reasons. So I always think with some of these tax approaches that they should really start trying to compete rather than impose on others.
Yeah.
So in the case of Guernsey and Hong Kong, Singapore, you've got low flat tax rates, and you often find that you don't have deficits because of it, because it encourages productivity, and the higher you put up the tax rate, the less tax take you get. It's kind of a conundrum, but it's one that we recognise.
I was surprised to see Hungary in at 9%.
Yeah, I mean, they haven't adopted the euro, but they are part of the European Union. Again, they're hungry for some kind of capital investment and corporate activity, like all these countries are.
Yeah.
But I think the way things are going, it's kind of inevitable that a flat tax rate or minimum tax rate is going to be just part of the scene, and I'm sure the Channel Islands will have to embrace it eventually as well.
But that could quite radically affect the Channel Islands, couldn't it, in terms of the competitive edge that they currently have?
Yeah, I mean, some tax advisors are saying it won't make too much difference because we've had something called the substance rules come in. So you can't just like stick a brass plate on if you're a big multinational and channel funds through Guernsey. The economic activity has to replicate the income coming in.
Yeah.
So that I think that has passed. And often these things using terms like tax loopholes and always targeting places like the Channel Islands. It's really an old game. The term tax haven doesn't really apply because we've adopted all the rules all along the way, and this idea that people hiding money here is just ridiculous.
Yeah,
maybe 20 years ago, but not now.
And of course, up until COVID, there was enough money coming in from the tax stream and the social security stream to balance a budget, almost, wasn't there?
Yeah. Yeah.
So to that end, I've always thought that tax havens is a very inappropriate phrase, and low tax economy is probably more appropriate. Yeah,
it's old school brown bully. To just pick on the smallest one in the
and kick it hard.
crowd, and make yourself look good at the same time.
Let's have a look at private equity and the supermarkets. Morrison's appear to be courted by several private equity firms at the present time, all wanting to get hold of it. What's the attraction there, Toby?
Well, the idea of private equity is to use, they say to invest, but it's actually using a lot of borrowed money to take over firms. Think of like Man United in the past, and you talked about Boots. And so you might have a company worth 12 billion, and they might use 9 billion borrowed money to take it over. So automatically you're saddling this firm with a lot of debt. You're in a race within 5 or 7 years to try and sell it off. So it's not like a long-term investment, at least not in our eyes anyway.
Yeah.
You're there to repackage it. Some say, put the lipstick on the pig and sell it to market. I mean, I'm quite positive on some elements of private equity on the smaller side, but when you get these gigantic firms dumping debt on their target, and I wouldn't say asset stripping, it's more cost stripping, I think, is what comes to mind. Often quality is one of the casualties as well, and it's not necessarily designed to be the best for staff either. So if thinking about it in the sort of stakeholder, to use the modern phrase, to use that term, a lot of it's unsatisfactory in the very large scale, and you get it. It's very financially driven, and you lose that customer focus. Remember, one fund manager I spoke to, I used to be at Lion Trust. He could always tell when a private equity firm had taken over somewhere, because if it was a local gym, the kind of quality of the soap would go down, and if it's a hotel, it's a bit grim. So on the face of it, the numbers look good and it's easy to sell, but quality is one of the first casualties, I'm afraid.
I suppose the exception to that has been Boots.
Yeah, I mean, they've grown pretty well. I'm always wary of potential shortcuts that go on. I mean, Boots is a positive example, but if you think back to the days when, if you remember Findus from the 70s, they're still knocking around, and you had the horse meat scandal with that, and all this cost cutting along the supply chains can lead to short cutting as well.
Do you think Sainsbury's is likely to go the same way as Morrison's, bearing in mind that they own Argos?
Yeah, I think anything that's a steady business, good revenues, it's a potential target, and money is so dirt cheap to borrow, and a lot of capital looking for a home as well. So everything combined makes any headline safe company an easy target, really. It's just a matter of price at the end of the day.
Mm-hmm. Let's move on to one of our favourite, CEO remuneration.
Okay.
there have been a few issues, I believe, over the last 3 months, haven't there, where an element of reluctance has been shown by the shareholders as to what they were prepared to tolerate.
Yeah, and there's two elements to this. The first one is the actual pay, and the other one's remuneration, because in America, they have these, well, a lot of countries have share options. So in order to hide the large pay figures, directors are given these share options where if you hit a target in the share price, you cash in and literally walk away very, very wealthy. So again, this word shortcut comes to mind. You'll do anything to get the share price up, borrow money, maybe do something inappropriate or not to the advantage of shareholders in the long term, just to pump up the price in the short run. So the share options are a bit of a curse. They were originally designed for growth companies in the early stages, and now they're used for very large firms. Yeah. But on the topic of pay, you're right. If you look at the S&P 500, it's the top 500 American firms over the last 10 years. The average pay 10 years ago was about $500,000. Yeah. And now the average is $15 million. So you're looking at a 30-fold increase. And if they got a 30-fold share price increase, maybe, but I don't think that's
the point. They still get the money, despite the fact that the value of the company, reduces the whole time. Yeah. It's crazy, isn't it, really? It seems to be probably one of the most effective trade unions of the lot, the Institute of Chief Executives, where they're all, pals together, but there we are.
Yeah, and it seems to be a round robin of revolving doors from one firm to the next. And
Yeah, that's
whether
right.
they do well or badly makes a difference. It's on your CV.
They're
and they
almost
just-
like football managers, aren't they?
Yeah.
You know, in terms of the fact that, okay, you get the sack for non-performance, move on to somebody else, and somebody else takes you. Strange,
nice
he said.
payoff on the way.
Yeah.
It's been it can't be more like have CEOs as a multiple of like the median salary. So the idea is that you're lifting all boats in the tide, because the more the employees benefit and the public, the more they have to spend. It is a virtuous circle, but some people that almost on the sort of sociopathic level, they're just there to rip it up and get what they can.
Yeah.
Again, talk about some of these firms that are founded by Quaker families, particularly like some of the banks and the supermarkets. They were very caring about the staff, and they did very well. And now that's all gone. So it's not trying to be religious about it, but
no,
it was, an all-round win-win.
They had a philanthropic outlook towards the staff, and I mean, you think of Cadbury's and Bourneville, the Bourneville Village, and Fry's and people like that. There are a whole load of them, but unfortunately, it seems these days that the sole object of the company is to grind you into submission before you reach retirement age.
Without a final benefit scheme.
Let's talk about the transition of BP and Shell and others from carbon to renewables. They're all plugging it now, aren't they, in terms of electric sockets all over the place and this sort of thing for your electric car. But they really must be on a situation now where things are going to get difficult for them over the next few years.
Yeah, you say that, and you could said the same about tobacco companies in the past, but these are some of the best performing stocks for decades.
Yeah.
So it's very easy to jump on the bandwagon and paint oil firms as the bad guys. And I'm sure that they're doing stuff on the renewable front, but a lot of this idea of being carbon neutral is founded on very weak assumptions and frankly quite poor science as well. Many academics are funded by the government, and there's also a big push by the World Economic Forum to decarbonize the world and restart every economy. But again, these people aren't democratically elected, but you'll find that all Western leaders are members of the World Economic Forum, so their agenda it goes. And in fact, you'll see this phrase "Build Back Better" was straight out of the book called The Great Reset. And lo and behold, every leader now says "Build Back Better" and in unison. So politically, it's become something like a Politburo where no one disagrees, everyone has the same words, and media is a bit like Pravda in the Russian days. It's all on message, one message. No one dared disagree. And if you're a scientist who has an alternative view, you just get removed from social media. It's deplatforming. It's absolutely appalling and very anti-democratic. But this is the way tyranny creeps into the world, and it's on the way.
It's back to Animal Farm, isn't it?
Yeah, very much so. I'm afraid.
Yeah.
Lots of historical precedent for what's going on, but it's unstoppable, unfortunately.
Continuing with pension scheme deficits. Now, they seem to have got totally out of control. A quote I've discovered the other day from their account states of Guernsey, the staff scheme, not the old age pension, the staff scheme, its deficit has increased from £500 million to £1.2 billion. And it's one hell of an elephant in the room, isn't it?
Yeah, I mean, it's easy to get spooked by these kind of figures. And it all goes back to, all finance goes back to the bond market and long-term interest rates. So what's happened, these reports are done every, I think, 3 years typically by actuaries.
Yeah.
And there's a rather poor joke about an actuary who owns a Dachshund puppy, and he actually puts it down because he calculates the puppy's going to grow far too big and won't be able to walk. And it's all down to, it's not a very good joke because it's for actuaries, but the idea is that, when you see a trend, human nature is to extrapolate it. And this is very similar to sort of climate data as well. So you create this fear-mongering idea that the current situational trend is never going to finish. It's going to infinity, when in fact it's part of a cycle. So this is the up of the cycle, and that's the down.
Yeah.
And to go back to the point of the question, the reason behind this deficit is that bond yields became so low. In the case of the UK, the 10-year government bond yield was down to about 0.2%. And now it's gone up to, well, recently up to about 0.8%. It's quadrupled.
Yeah.
Again, it's very small figures, but it just shows you that relying on the present to forecast the future doesn't work. And what you'll find is that these bond yields are, it's a bit like a tap of money. The smaller the yield, the less the flow of future income for pensioners. But as bond yields go up, that tap opens wider and wider. So there will be a reduction in the deficit in future. And I know the states are going to have taken some measures to change the structure of the scheme, so it's not so lopsided, because otherwise it's like trying to run up a down, a down flowing escalator. No matter what you put in,
I mean, I put that to you as an example, but at the present time, it must apply to a lot of companies and other local authorities with final salary pension schemes.
And particularly all governments, particularly in Europe, where the whole idea of creating negative interest rates was to make people spend and generate economic recovery, but it's had the opposite effect. People have hoarded money because they're scared of, scared of the banks, that scared from last year as well, not surprisingly. And it's always this cause and effect. You have these unintended consequences where you try and interfere in a market and suppress prices or manipulate markets and yield curves. It does the opposite. Pension schemes are a good example. The other thing with Europe is that, sorry, Tony.
That's okay. How do you see UK inflation over the next year or two? Because now and this applies to me as an old whatnot. The triple lock obviously could be substantially exceeded if they follow the employment calculation as opposed to the cost of goods or the 2.5% lock.
That's right. Is it the triple lock you're talking about? Yeah, they'll just suspend it. It's that simple. It was the idea. It was I think it came into force about 10 years ago.
Yeah, I think it was under Cameron, wasn't it?
Yeah, and it'll just it just be suspended. Because they probably thought wages won't go up much, inflation's under control, so we're okay.
If, for example, because they're saying wage inflation could be as high as 8% this year. And if the old triple lock did 8%, well, that is going to knock quite a hole in finances. And the problem is that that then establishes it as the next base figure for the next year, doesn't it?
Yeah, and but other people start.
So it's compound interest. Yeah. Yeah.
And it's unions want the same. I mean, ultimately, what we're going to have is a form of universal basic income, because governments have started printing money already, and they'll probably have a flat set amount of income per person, which is livable on, because the World Economic Forum get their way, any industrial job will be scrapped and we'll be doing green stuff. So there'll be a lot of unemployment to come. Everyone will get paid a kind of living wage, effectively, whether they work or not, and they'll print the money. So it's called modern monetary theory, or magic money tree, as we discussed before. So,
Mrs. May was keen on that, wasn't she? The magic money tree. Yeah. Let's go and take a look now at Mr. Musk and Mr. Bezos, two very successful American entrepreneurs. Musk with Tesla cars, and Bezos with Amazon. At what point do you think the US government will start thinking in terms of the antitrust laws? That's when a company gets too big, isn't it?
Yeah, I mean, it was a guy called Sherman who brought this about probably 100 years ago, roughly, because the same old human beings don't change, and the same old monopolistic behavior always creeps back. You had it with Rockefeller, who hoovered up everything after the crash. So Standard Oil got broken up, for example. So I think nowadays that because this isn't capitalism, this is what I call crony capitalism, where governments and big firms work hand in glove. Partly they'll have their tax rates reduced because they make big donations to foundations. It really is that. it's equivalent to what's going on in the Roman Empire, and it's corruption with a small c. It's not legal, but it's sickening all the same. So I think they'll be left pretty much alone. The supporters of free markets are no longer exist. Everything's about being woke and basically quasi-Marxist behind the scenes. So yes, this idea of freedom and free markets is seen as old hat. So I think they'll be left to it, and and big tech as well is just the same.
Make even more.
By influence, and they'll ask for more regulation to crush competition from all the firms.
Yeah.
The big.
I was interested to note the other day that Aviva is closing their commercial property fund. That's a sign of the times, presumably. Yeah.
So again, even then, you've still got to wait. It's about 18 months at least to get your money. So
yeah,
we discussed on a previous program about the damage to commercial property and high streets. So yeah, there's no big surprise in that. As you say, sign of the times, but hopefully we'll get some refashioning of high street and property. Even in the Channel Islands, we're seeing it. The main barrier to all these things is planning laws, which I don't know a great deal about, but that's often the way things get stopped.
Yes, it's the old story, isn't it? You really need to have a streamlined planning law system to make these things work. So many things you hear of, permission is refused, it goes to appeal, there's a public inquiry, and suddenly something that should have been sorted perhaps within 6 months is taking 6 years. It's quite daft from that point of view.
Entrepreneurs don't have the money or time to hang around like that.
No, not at all. Talking about planning, very interesting to see that the John Lewis Partnership is moving into house building. 10,000 units they're talking about, and I just wonder how they get the funding for that, because they're not a company, a PLC type of company, are they? A sort of private cooperative almost.
Yeah, it's a good question. I don't know how they'll get the funding for it, but I assume it'll be some kind of bond issue or bank borrowing. But it's a great idea.
Yeah.
Part of their approach is that the houses that are built have to use, or there's an option to use John Lewis furniture and furnishings. Staff can get a discount on the rent. So yeah, if you're thinking about commercial property and areas that are being dying off, this is quite a good way to rejuvenate it, because you've got people on hand using your goods. I think that's a pretty smart move that they've done, and it's not just the UK, it's America as well. BlackRock are buying up real estate like Billio, because they need the income.
And it is mainly for rent, not for sale.
It's retail. So a lot of people complaining because BlackRock are coming into Florida, because everyone's fleeing from left-wing states of California and New York, all planning to Texas and Florida, partly for the better weather, partly for there's more freedom and less taxation. And BlackRock are buying property at like 30 to 50% premium. So it's really freezing people out, but their pension funds need to generate income, and that's one of the last bastions of income is being a landlord.
And BlackRock is one of the largest fund managers in the world, isn't it?
That's right. Yeah. Have lots of index trackers.
Yeah. What about bond yields? We've talked about them briefly just now in terms of pension schemes and things like that. Where do you see them going in the short term?
There's a real conundrum going at the moment, because I'm showing some of my colleagues a chart today where you've got, as I'm sure you've seen from the news, you have inflation picking up. In America, it's hovering around 5%. And at the same time, bond yields have actually gone down and flattened, because in classic investment theory, things like cash and bonds are very susceptible to losing value. So the idea is that you're talking about the scales going up and down. Yields go up for bonds as prices fall, and prices fall when you get inflation. So in theory, you're losing money through inflation. The bond prices should drop, and they've gone up. So it's very bizarre. And part of this is foreign demand. Again, Japanese are big buyers of US government debt. And quite strangely recently as well, you normally have sort of crony investment banks who the government like to look after in the States, and they're on hand to buy any debt that doesn't get bought at these auctions that the government do. And they've hardly had to raise a telephone. There've been so many foreign buyers coming in that they don't need to get involved. And that could be because people want the US dollar. It could just be that desperate for yields, because the yields in America are relatively high compared to Britain and Europe. So yeah, it's just something strange going on. And the reason why people are positive on bonds is that the American central bank, called the Federal Reserve, has said, "Oh, inflation is just transitory, nothing to see here." And I'm pretty sure if we go to the supermarket in a year's time, we're going to be spending a lot more money than now. But often the numbers don't pick up on commodity prices like food and energy, that they're stripped out rather conveniently. So yeah, I think with bonds at the moment, government bonds are not an area that I'd invest in right now.
No.
If you have to hold bonds, then I'd go for corporate, again, because companies can't print money like governments do. And we don't know what's in the pipeline for government debt anyway. We might have a big reset of the bond market like in the past, as we discussed previously. So who knows? I want to keep my money in private assets like equities and company bonds or precious metals, but I'm sure we'll talk about that later.
Yeah. Exchange rates. The pound dollar is reasonable at the moment. It's better than it has been, isn't it?
Yeah, it's the pound. I think one of the clues that the UK is doing okay is when the stock market and the pound go up together, because in the past you had the old seesaw effect where weaker pound saw the stock market go up because of our foreign earnings in the UK. It translates into higher prices. Now we've got stronger pound and stronger stock markets that shows the confidence is there. So the pound could appreciate a bit more against the dollar, but I tend to think of mainstream currencies a bit like abseilers on a cliff. They're all going down together, but unless you look up at the skyline, you can't see it. You kind of look at your mate going down the road. But compared to real assets, and we all know about property prices at the moment, money is devaluing, and exchange rates don't take that into account because they're all falling together effectively.
Yeah. And just to sort of conclude, I've put in this item: alternative investments, bitcoins. What do you think about them?
I mean, they're really, I call them a commodity more than an investment. Really, because it uses terms like mining for cryptocurrencies, and it's dead right. You are expending energy to extract something, so it is like a commodity. And obviously, they got pumped up heavily and have bombed out. But I've just seen something on Twitter today about Apple buying a couple of $1 billion worth. So you just can't write this beast off. It's like a hydra. You chop off what head and it grows back again. And there's something very powerful behind the blockchain and cryptocurrencies, and eventually they could be banned because governments want to do it themselves. That wouldn't surprise me. But it's like all these things that people flag wave their own favorite asset, but it's just part of a jigsaw.
And it's funny, Mr. Musk with the cars, with Tesla cars, having sort of promoted Bitcoins, has suddenly out of the picture, sort of said he doesn't want to sell his cars for Bitcoins anymore. Yes,
because all the kind of people laying into him about the energy usage and the like. But I'm sure he'll be back. And it's just there's a lot of public relations going on. There's money to be made. I'm sure they'll be at it.
What about precious metals, gold, silver, and also diamonds?
I've been very surprised about that gold and silver haven't done better, because when we're talking about bond yields before, everything comes back to bonds. When you have the inflation rate above bond yields, it's destroying money, as we mentioned. And that's when you have what we call negative real interest rates. That should be pushing up the price of gold substantially. And silver is really the speedboat versus the supertanker. It kind of, it really moves when gold moves to a greater extent. But not a lot's happened, and gold miners are pretty much on their knees. They're looking value-wise like they were, at the height of the 2008 credit crisis, and yet they've slashed costs. They're really efficient. and the gold price is higher than it was then. So it's something strange going on, but I think ultimately as more people look to get out of cash and hunt for anything tangible, and include Bitcoin in that as well, the more these will go up. And it only takes a little bit to lose faith in government, as history shows. And this talk about inflation being transitory, again, there's only so many times you can tell the market one thing and something else is going on in reality. And we call this the jawboning effect, from the biblical reference to Samson, who fought off the Philistines with the jaw of I think it was an ass or something. There's only so much you can yell at the market and it takes effect. Eventually you become numb to it, and that's when you get the loss of faith and the flight out of government debt into something real. Again, we're kind of seeing it already with property. It's, you're hearing all sorts of stories about not just the demand but the overwhelming it's the people looking to view a house on the same day and buy it. It's
sure.
Crazy.
and gazumping again and all this sort of stuff.
All old human habits that creep back.
Well, have you ever had any views on stamps for latterly?
I mean, you did mention diamonds as well, but just to round that
sure.
Because normally gold and silver, they're what's called fungible, so you could chop it up and it's the value is in proportion. Also diamonds, they're one piece of stone, and there's lots of quality issues about what makes a good one and what doesn't, and not many people really understand it. So I think diamonds are more of a flight asset from tyranny. So it might be useful again in future. So I think that more assets that you can divide up are much better. I mean, stamps are really representative of this real asset theme as well. It's not just them, it's like watches, cars, any sort of collectible which is rare. It's just going insane because this money needs to find a home. And we did have like a stamp shop in the Channel Islands before, which went bust eventually. But again, it's not that easy a market to buy and sell in, and again, you've got to know your stuff with it.
So
I mean, I think all these things are a symptom of a loss of faith. People often can't put the hands on can't put the finger on what's going on. Again, I think we referred to Northern Rock previously, where all these Geordies were queuing up in Newcastle to get the cash out. And so BBC commentators in London are saying, "Oh, look at these peasants! What are they doing?" And it's a run on the bank. They're a dead run. And the people aren't stupid. They can sense something is wrong, and all these moves and assets are a symptom of something going wrong below.
Sort of pre-panic.
It is. It's like a collective herd movement. I think there's a book called Wisdom of Crowds, and I think this is a case in point where the price rises are like a thermometer for something else, some kind of malady in the system, and it's I think we're there.
Toby, thank you very, very much for a most interesting discussion, and providing we're all still around, have one in 3 months' time. That'd be great. Touch wood. It's really appreciate it because it's good. Okay, so many thanks. Take care. Cheers. Thanks, Ben. Goodbye.